And thank you again for the invitation here, so that I'm able to share with you some of my experience in the green finance or sustainable finance. Now we have transition finance, we have climate finance, so there are different terminologies that we should perhaps discuss a little bit more. But I can promise you that all these kind of different financing systems, the aim is to decarbonize the earth. So I'm speaking to you today as the chairman of Friends of the Earth. Also, Professor Xu kindly introduced my background in investment circle. So I try to, and it's really great that I'm able to see some old friends and my teachers, actually my mentors. There are some distinguished speakers following my speech. And also I want to apologize in advance that I have to run for my plane to the US tonight. So I'm not able to join the discussion later on. But I try to be succinct, and I leave more time for perhaps discussion in my section. Without further ado, I should probably start, okay? Now, my background, many of you know me like 30 years. I started my career.
Do you mind?
I can use the mic here.
You can get closer to this one.
Oh, okay. I get good.
Yeah.
Okay, lots of my friends here, old friends, they know that I started my career as an environmental campaigner or policy guy at Friends of the Earth, okay? Then I jumped to the business world and I started business ventures and I started to do M&A and I joined a private equity fund. I co-founded Asia's first dedicated environmental fund. It's called AEP, Asia Environment Partners, still ongoing now. My former boss is the former chairman of Morgan Stanley, as a spin-off from Morgan Stanley. So we are very traditional private equity theme, but our focus is on environment. We have debated whether we form this fund in a manner what we call the impact fund. Impact fund is where people would somehow lower their return hurdle for the benefits of the environment, right? But we chose not to lower our return hurdle. We just want to run a proper private equity fund, but just the space is environment. So we invested at that time, that was back in 2007. So we were investing heavily in renewable energy, solar, wind, and some of the key components of solar wind, small hydro. We invested in CBM, coal-bed methane, natural gas, incineration, sewage treatment, etc., etc. Those are classified as environmental deals at that time. And my LPs, my investors, are families from the US, university endowments. We have some institutional investors like Deutsche Bank, Credit Suisse. IFC is one of my LPs. So we run an international platform that we try to draw the capital to focus on environmental investment. So that is perhaps that is when I started the environmental investment venture. And then, of course, I joined some other larger scale conglomerates. We invest heavily in solar. One of my former employment is when I joined that company, we built. They already had 700 megawatt solar in Kubuchi Desert. Then after I worked there for 7 years. When I left that venture, it was 3.4 gigawatt in one site. It's a huge deployment of solar power in Kubuchi Desert. And that was one of the cases that where UNEP was promoting that China has actually did something really gorgeous that other countries should learn from the Chinese experience. And I also learned from my career path, from all the deals that I've done, and for all the people I met, for all the banks and the policy banks, all these different kind of people, they have different aspirations, they have different return requirements. So there are lots of experience accumulated. I was talking to Professor Lam this over lunch that we want to actually, if we want to do the environmental deal on transition finance right, we probably want to integrate different areas of expertise. For example, you have to have the people with the environmental knowledge or the climate knowledge, science knowledge at this side, and you have to have some knowledge on technology. For example, solar, wind, transition finance. We talk about energy storage, for example, green hydrogen, all this kind of technology. Okay, of course, you want to have some finance background so that you can try to integrate these three areas. Now, I will be using some slides to demonstrate or illustrate why there are problems on one hand, but there are challenge, and there are huge challenges with people are all saying we need more capital to invest in transition finance or green finance. But how? Okay, we have more than enough manufacturing capability. Okay, China's solar manufacturing capability or the supply chain is enough for the entire world. Okay, on one hand, they're sitting there. On the other hand, yes, we need more solar. We need more wind. But how? And there's this huge gap. I'll be showing you some statistics. There's a huge gap here. But in between, who's going to do that? Okay, who has the expertise? Who has the capability to integrate the different expertise or different sectors to work together so that we can really come to solve this huge challenge in front of mankind now. Okay, so let me start with my slides. Not working. Just use this one. Okay. Now this picture, you must be very familiar with this chart. We are having 54 gigatons now.
Yeah.
Okay, now it's working, right? Yes, okay. Okay, yeah, pointing to here. And this is the light. Okay, now we are 54 now. Okay, 57 now, gigaton, the entire world. Okay, all these greenhouse gas emissions. And it has been increasing. That's why, many of us, you come because we want to share with you our insights on COP29. Many of us, we went COP29, maybe COP28 in Dubai last year. A lot of government, NGOs, policymakers, they're talking about this trend. Okay, so how are we going to lower this part? It's about political will and capital. Okay, political will, yes. The European Union, they want decarbonization. The US in the middle. It depends on whether it's Democrats or the Republicans. And China, yes, of course, China wants to do business. We have the supply chain, right? We want to sell our equipment, we want to sell our technology, sell our solutions. And the oil states, they say, yeah, probably later. Yes, we want to do it. We also want to do energy transition, but we are on the fossil fuel basis. Give us some more time, okay? And the island states, on the other side, our country is disappearing because of the flooding and typhoon and all these kind of things. So we have all these kind of scenarios, okay? These are the things that we want to have both political will and the capital to resolve the problem. And I'll say, okay, enough is enough. Then in my later slides, I will tell, okay, what is not enough, okay? But enough is we have starving algae thing, the ice cap before and after, okay? And all these kind of things. This is very, very bad, and this is tragedy, okay, to the mankind, not just for human beings, but also for all the biodiversities on Earth. Oh, sorry, I come back one slide. All right, here. This is the current trajectory, okay? Now, the ideal case is we go down to this route, the green one, and I think most likely we are going here. Okay, look at the gap, okay? These are the gigatons, okay? If we want to come down to here, we want to, okay, we talk about these nationally determined contributions, right? And there are conditional and unconditional cases here. So if you want to seriously go from here to here, we probably want to do this much. So it's a huge challenge in front of us. How can we, if not this one, even we are going this side, it's still better than the conventional route to come to here. So current policy scenario is this line, and unconditional NDC is here, and then the conditional NDC is here. These are the current scenario, but we want to deploy more capital, more projects to try to lower, try our best to go to this route. But I think it's likely if we have the political will and the capital deployment, that we probably end in here, okay? Now, we talk about transition finance. Okay, what is the definition of transition finance? It's a much wider concept. It means it's the funding and tools that help companies and industries to shift from high carbon to low carbon operations. Okay, so it is, of course, in line with the SDGs. And so we want to go down the 1.5 route. This type of finance supports, again, companies and activities that are not yet fully green, okay, but can help to go greener, right? So to us, become a more sustainable, reducing emissions. It focuses on inclusivity and environmental integrity to prevent greenwashing too. So we always talk about, the ESG report, whether the ESG data is credible or not, trustworthy or not. Are there any greenwashing here? So transition finance also care about this kind of thing. These are the definition widely accepted by the industry. What is transition finance? Okay. Oh, sorry, go back one. No, it means that we are trying to invest more in renewable energy efficiency, sustainable infrastructure, especially for my company. Okay, we want to say that we are investing into something what we call stable, scalable infrastructure for zero emission fuels, for example. What does that mean? Zero emission fuels. It is not renewable energy like wind and solar, but we are investing an infrastructure that can produce green hydrogen, for example. That can produce, from hydrogen, we make green methanol. From hydrogen, we make ammonia, green ammonia. So that is what we call the green molecules that can also help us in some use cases that you cannot fly an airplane using battery now, right? So you want to fly airplane with SAF. It's also one kind of near zero emission fuel. So we want to deploy capital to build sustainable infrastructure for zero emission fuels. That is also something very, very much attractive to the capital market at this point of time, because we are going, like the IMF, the International Maritime Organization, they do have mandatory goals for the ship liners, like the sea liners, to change from conventional engines to new engines, burning methanol and ammonia instead of oil and heavy oil and all this kind of stuff. So we are looking at this space heavily. Now the tools the tools that we use can include bonds, or what we call sustainability-linked loans, equity investments, like equity invest into companies or companies on the rise, and other financial products aimed at supporting transition efforts. So these are linked with what I said earlier. It's called transition financing space. So that is to help. The purpose is to help create a sustainable economy that by funding projects that cut greenhouse gas emissions, and improve the environment. That is the definition. And we have some focus area. It's very inclusive. It can involve traditional industries. Remember, it's not entirely 100% green, but it's going from higher emission to lower emission, right? So it's more inclusive, that it can involve both traditional industries and new technologies, and the knowledge that some sectors need major investments to reduce CO2 emission. That an achievement alignment with climate goals that supports national and international climate goals. As I said earlier, we also read the NDCs, for example, like those in the Paris Agreement, by encouraging investments that enhance climate resilience and sustainability. Now, there are other types of like climate investment that focus on resilience and adaptation. Okay, that part I will talk about it later. The difference between transition finance and climate finance. Okay, take a look at this chart. The key is power. If you want to decarbonize, especially in the case of Hong Kong, okay, Hong Kong, we have like over 65% of energy of emission is from electricity, from power. So the key is power. If we can catch this clean power, 45%, and this is electrification, like if we change to electric cars, for example, then we are harvesting like this much. So it's a huge pie here. If we want to go this route, the net zero scenario here. If there's no transition, we go this route. Okay. So there are different sectors that we can look at how to turn it into a greener economy. But the key is still power. Yeah. How can we switch from dirtier power to a cleaner power sector? Investment-wise, here's the opportunity. Okay, I see that this is also the challenge. Okay, if we are going to solve this problem, we need that much of capital to go through this route. And if we want to go down like the zero zero pathway, we need 215 trillion US dollars. So people will say, yeah, it's a lot of money. Okay, how can we have this money? But people like us, we understand this is the challenge, but this is also our opportunity. I'm going to show you the other diagram. If we want to go down this route, by now to 2030, we have to go down like 37% of the total emission here. And that requires a lot of investment along this path. This is the scale of challenge. It's a lot of money here. So people are saying, if a country, we talk about different needs, right? We have the social benefits, we have environment needs, we have economic development. So if I am the a leader of a state, how can I allocate money just to focus on the environment? But actually, the story I want to tell you is that as an investor, okay, we think renewable energy or energy transition is the best, probably the best sector to go for investment. The other one I can think of is the medical part, like the investments go down to study the what is it? My mind is not sorry, because I had COVID last week. That's why we are looking at the protein side. We're looking at the genomic side. So those are the investments that probably needs longer duration to reap the benefits. But energy is first of all, it's a huge market. Second of all, everybody needs transition. Okay, so we think investing in energy probably is a better idea than investing into medical science, for example, or medicines, for example. At this point of time, okay. Of course, nobody's thinking about investing into real estate now because real estate is not good. So we are trying to tap the current state of investment should be focusing on. Oh, sorry, go back to this view. If we can trigger capital and go down this route, we probably can use the reason why I started to shift my career, because I remember I talk about myself as a policy guy, but we think actually we have a thinking process here. If we can mobilize capital in the boardroom of a very resourceful conglomerate or a listed company, then perhaps the impact is bigger than we just trying to lobby the government or lobby or doing education work. So there are different ways we look at the spectrum, okay, where my entire career is about environment, okay. Whether or not I'm on the policy side, I taught in the university, I work in the business conglomerates as an entrepreneur, as a project manager, and then now I'm in the investment space. All these things are on the same stage, but different corners. But the centerpiece is environment. That is why I'm able to retain my friendship with all the great minds here. My connection is not lost, and for me myself, my own personal learning curve is that I realize that I actually need that kind of knowledge so that I understand the nature is the nature of the problem is very complicated. You have to understand different people have different minds. Some people think about policy, some people are talking about technology, some people talk about finance. So in order to understand how we can do this work, then I personally have to try different roles so that I know how to integrate it. This is what I've been doing in the past maybe 20, 30 years now. That is why I can retain the talents, I can retain friendship and try to mobilize resources. Now I'm trying to mobilize not policy resources, but capitals, trying to focus in these areas. Now, as I said earlier, okay, climate finance is different from the transition finance. This is the funding aimed at addressing climate change, solely on climate change, by supporting projects that reduce greenhouse gas emissions and help communities adapt to its impacts, which includes investments in renewable energy, energy efficiency, and climate resilience measures. Very specific climate related, right? Nothing about water, nothing about other things, right? It's just the climate. Now, if you look at this chart, the bigger picture, not those numbers, the bigger picture is now, here is where we are now. And here is the capital needed. So here's the gap. as I started my talk this afternoon, I said, no, the gap, you used to see the gap, which means this is the challenge, okay? But this is also the opportunity. If we understand that the required capital is here and there's this market gap is here, if we have the right way to mobilize capital, we can go up to here, right? This is our mission, actually. This is our mission, this is our belief that we can integrate more resources, particularly capitals, to try to reach to those. We're talking about billions. This is billion. This is a lot, 1,000 billion US dollars. Okay, now this is where we are now, but this is what we need by 2030. This is what we need by 2050. So there's still a huge gap here. This is the average needs in this average scenario going up here. The next slide will be easier to understand now. This is an assumption. If we invest this money, we save this loss. So the investment is worthwhile to save this loss, right? This is what the business as usual scenario. This is the money invested, and this is the avoided losses, which shows that very clearly, if we can get this investment, we can avoid this much. So the investment is worthwhile, right? So that is why we try to work with the financial sector and say, look, there's this gap, right? We need more capital to do this thing, okay, to complete this scenario. I like to, if I can draw here, there are lots of companies here.
You can go here. Sorry.
Here?
Here is much
Okay,
better.
it's better, okay. If we have this products, okay, products, we have software, we have hardware, and we have solutions. These are what a company do, right? A company makes products, provide software, provide solution. Okay, but this is good. In China, we said this is the all yifang. Okay, that we are selling this to jiafang, right? This is a very straightforward trading or a solution provider model. But we want to make this into a financial product, which is investable and bankable. Say bankable. And these are projects. So if we can have projects, investable projects, bankable projects, then we can have the capital. Then we can sell this new product, this is financial product, to the banks, right? To PE, to banks, to asset managers, to policy banks, whatever, okay, you name it. But these people, they won't invest in like this here, right? There's a gap here. So why we need people with expertise to re-engineer this product into a new product and then sell it to the capital market. Okay, so that's why we need different, as I said, different talents to do that. And our team, when I form my team, I want to do this one. When we have this investable project, bankable project, the capital will find you. They come to see you. Okay. But then when we have this project at hand, we have the bargaining power, which product to buy. We can buy from anybody in China or in Europe or in Asia. So the key is here. That is how, if we can do this part, make it bankable, then the capital will come. Then we can solve this problem, right? If we are this for example, in China, this is very competitive. What we call the Red Sea, okay? Everybody's doing this. The Chinese, for example, solar or energy storage, as of now, is enough for the entire world, which means the other guys, they don't need to do anything, okay? China can supply the whole world. And they are doing competition. They're lowering their price. So this side, there's oversupply. But here, we have the opportunity, right? They need this. That is why there's a gap, right? These people, this cannot match. These two sides cannot match. So we try to bridge the two sides to provide more investable opportunities and to draw more capitals to complete this picture. That is what we try to do. I think this is a very clear concept that you need people here. Transform the projects. Now the GSS market, we call the green, social, and sustainability bonds. Then my next slide, we talk about Hong Kong. Hong Kong, we changed our green bond name to sustainability and green bond. Okay, so the definition, never mind, the definition always change, but the core idea is to decarbonize. Okay, like before we have CSR, now we have ESG, and maybe in future we have different terminologies. All these kind of things is evolving, but it doesn't really matter because we are trying to do decarbonization. We're trying to clean up our world, and we need capital to do that kind of thing. So I don't really care what this kind of, what this kind of terminology get changed. But if you look at this GSS bond, it's more, it's wider, it's more inclusive. So you see the portion is huge. But you've got sustainability linked bond, the green part, it's smaller pie here, right? So as I said, transition finance is a bigger concept. It's more inclusive. So you have a bigger market on that. Now, transition finance is a terminology that is widely accepted by the banking industry, by the financial sector, that the market currently is in a number of trillions of US dollars already, okay? And it's growing year on year. And transition finance is the concept, and energy transition is also widely accepted. Now here, if you tell people I'm in the 新能源, okay, I'm in the new energy market, the capital market won't like this idea because already oversupply is very competitive, and your valuation, your PE multiple will be very low. Okay, but if you are talking about no, we are helping countries to do energy transition, and we are linking transition finance to do this. So on one hand, when I do business in the Middle East, for example, I tell the Middle East guys that, look, we have the best Chinese supply chain, the best cost-effective supply chain, okay, which I can supply to you. And I provide part of the capitals. I need you to also co-invest into your projects. By the way, the projects in your country, okay, it cannot go away. So I come here to help you to do the energy transition. So in that part, I have two things. One is I have technology. The other thing is I have capital. So we merge two things together, and I provide an offer to my partners in the Middle East, in ASEAN, in Belt and Road countries. That will make them very hard to refuse your offer because you give them both things, right? So that is something that we try to structure, and we try to, and also there are newer financial tools coming up, like the GSS bonds or the green bonds, or the SLB, the sustainability linked bonds. All these kind of things are new, but never mind. It all comes by solving this problem of decarbonization. Now, sustainability linked bonds, SLBs, are a flexible financing option that ties financial returns to the achievement of specific sustainability performance targets. Bonds, okay, Hong Kong government. We've been, from Friendship point of view, okay, we are trying to lobby the government, and we hope this can change next year. That currently, I don't know how many of you actually had the green bonds, Hong Kong green bonds. Yeah, I have two. And then the problem is, okay, it's a high demand, but the Hong Kong government doesn't have enough products or projects to get to this bond issuance. Okay, and why? Because the Hong Kong government's money now, they have a limitation that all these kind of renewable energy assets or energy efficiency projects has to be in Hong Kong. But this is wrong. We think, why not we can, Hong Kong people's, Hong Kong is a capital market, right? On one side, we want to activate or reactivate the capital market. We want to, the capitals are looking for opportunities, right? So if Hong Kong bonds can invest into solar projects in Inner Mongolia or in the Middle East or in Greater Bay Area, why not? That on one hand, the capitals in Hong Kong can find projects. On the other hand, for the like us, like a citizen, so we buy green bonds. We have our own proceeds, right? So it's a win-win situation. What's the point then? Why we have to limit ourselves in Hong Kong? The other countries, they are doing exactly the opposite. 30 years ago, the Singaporean government, they invest in Suzhou Industrial Park, right? And they've been reaping the benefit for 30 years because Singapore, they don't have the land, right? They have to invest in elsewhere. And in the Middle East, they invest in lands in Latin America, in Kazakhstan to grow crops for them because they don't have water, right? So they use their own capital, but invest into other people's land, but then they reap the benefit from there. So Hong Kong should exactly do the same. Why we have to limit ourselves to be in Hong Kong? This concept is wrong. So we are trying to promote it. But if the Hong Kong government can relax this limitation, say that Hong Kong green bond can be issued on projects elsewhere, then the green bond size in Hong Kong would be like, I don't know, tripled or quadrupled, or maybe 10 times bigger. So everybody benefits from it. Hong Kong, we still want to make investments, right? So this is something that we are trying to crack with the Hong Kong financial policies, policy guys here. And I myself, I also sit on the policy committee of Hong Kong FSDC, the Financial Service Development Council. And we are proposing something to the Bureau. And hopefully the Bureau next year, they will change this green bond limitation to elsewhere, okay? So that is something that we want to focus. Now, it's only very little money here, right? So we talk about the gap is huge, right? We're talking about hundreds and thousands of trillions of US dollars. The green bond here is only like 50 billion. So we have a big room to increase the green bond investment in different projects. And now I'm talking about the Hong Kong case now. Okay, the case of Hong Kong SR. Now, this year we were in Baku, Azerbaijan. This is the second year that FSDC and Friends of the Earth, we joined hands and we try to, we had this section at the China Pavilion. We try to articulate Hong Kong's green bond issuance, how finance is helping the environment, our successful experience in issuing green bonds. Hong Kong is as a starting point, okay, globally, Hong Kong is not bad. Hong Kong, we issued 1/3 of Asia's total green bonds. We've issued 220 billion Hong Kong dollars equivalent in different denominations. We also have tokenized green bond. And these are the things that the participants in COP29 want to learn from Hong Kong experience. And actually, at the end of our panel section, our discussion, a lot of people come by and say, can you talk to ours next section tomorrow or the day after tomorrow? Can you come to Bangkok to talk to us? The UN institutions, they are coming here. They want to learn from the Hong Kong experience because this is serious money, okay? Hong Kong, in the very simple way to look at this issue is that Hong Kong has successfully done this, right? We have projects in Hong Kong. We made these projects into a bankable thing, bond, as a product, okay, investable product, and the capital market come to buy it, right? So this is also very valuable, but the thing is, we need to scale it up. 220 billion Hong Kong dollars is still very small. So we see there are huge potential markets, untapped markets in Asia, because 85% of Asia's energy derived from fossil fuels. Remember the chart that I show you, the 40, this chart. Let's go back a bit. So, this one. See, this is the power side. 85% of Asia is still fossil fuel. So Asia is a huge market here, right? The 85% of fossil fuel in Asia turn clean power and electrification. Remember this? So we come back to here. 85% out of that big pie. So we really, and IMF, it's a very recent study. It reveals the emerging developing Asian economies require at least 1.1 trillion US dollars annually, every year for climate mitigation adaptation. So from this number, this is 1/3 of Asia's bond market, okay? To look at this number, still a huge gap. And then look at this gap as opportunity. If we can be successful in converting these products to this new financial product and sell it to the capital market, then we are solving this problem. We're inducing more capital into the market. So that is exactly, the gap. We see people see, oh, where's the money? How can we get this money? But people don't see there's an oversupply here. There's a lack of capital here, and they are looking for good products to invest. So if people can structure something really good, then here's the business opportunity for the financial market. This is this year. We were in the China Pavilion. COP28, Dubai, Azerbaijan. Next year will be in Brazil. So this year is actually specifically looking at the transition finance. And it says triple finance is needed to developing countries from the previous goal of 100 billion annually to 300 billion annually by 2035. Now, this is a commitment arrived this year in Baku. But people's criticism is that why 2035? It's 10 years away, right? The goal is there, but it's too long, too many years to go here. So secure efforts of all actors to work together. It is easier to say than easier to do. That's why if we need 1.3 trillion per year by 2035, we rather start from now, right? There's still the gap to go. So we start to produce these kind of products. It's still the product with scarcity, and these capital market is looking for this product. So we see the opportunities here. This is the story we try to convey to the audience in Baku, and we use Hong Kong as a successful, Hong Kong's green bond as a successful case to amplify this impact. And we try to tell the Hong Kong government that, okay, look, there are two bureaus hand in hand now. One is the FSTB, the Financial and Treasuries Bureau, Financial Service and Treasuries Bureau. The other is the Environment EEB, right? The Ecology Environment Bureau. But these bureaus have to work together so that there's no picture. There's one picture that the two bureau has. This is the permanent secretary for Selina is the permanent secretary for FSTB. There's another Mr. Chair is there. We don't use that picture, but after this China Pavilion. This is a section. We actually conducted a closed door talk, if you like, private talk between these two bureaus. And look, and I tell them, look, this is very good. Okay, they are listening to Hong Kong experience. Hong Kong can do more in this space, and it's actually much better than Hong Kong doing some advertisement or TV commercials. Try to say, oh, Hong Kong is good. Hong Kong. We use and this panel is beautiful. Because and Amos was on the panel, I think. We have entrepreneurs, we have regulators, we have policymakers, we have standard setting guys on the same panel. In order to package this thing, you have different stakeholders, different sectors of people, different expertise. You have to, make them work together so that you have a credible product to sell. And Hong Kong's successful story is because we have these professionals that helped do this green bond system, that help to provide the good projects in Hong Kong so that we can issue what we call now the green and sustainable bond in Hong Kong. Talking about talents, okay. A bit of the commercial here, the Friends Live and SESCA. We have a SESCA program. SESCA is in partner with the EFAS. It's the European Financial, what is it called? Financial, financial, I forgot the full term. Anyway, the EFAS, okay. So we administer this EFAS program. This is what is recognized in Hong Kong as the top ESG program. This is supported by the Hong Kong government. So the people, if you apply for this course, the government will subsidize part of the course fees. And it's now very happy to announce that we have over 1,500 graduates of this program. They're now working in fund house, listed companies, asset management house. They're doing serious ESG and analysis works. And we are able to build this green finance talent pool in Hong Kong so that we can structure more these kind of products and turn the ESG more credible more credible, and it's like a big family now. So the efforts actually, they came to Hong Kong to conduct their annual conference. And then so they decided that next then World Congress will be in Hong Kong, because Hong Kong actually has the higher density or higher number of graduates than than Germany, for example. So we do have a good financial infrastructure in Hong Kong, and the Hong Kong financial sector is also trying to find a new way. We cannot always focus on real estate. We cannot always focus on public utility. We need some good, energy transition story. We need to have biotech story. We need to have some other, high growth market stories. That is why we need professionals to work on the ESG and work on the financial sector. And in future, we're looking at these sectors, okay? The wind, this energy storage, hydrogen, solar, all these sectors work together. These are the investable space that energy transition is looking at. And Hong Kong should finance more of these kind of projects in Hong Kong and outside Hong Kong. And that's going to benefit the entire route or the entire map of transition financing and decarbonization. I probably pause here, and I look forward to your questions. So my mind is not working very well today.
Thank you very much.
Thank you.